Believe it or not, we still get the question from purchasers, sellers, and people saying, should I talk to another bank or should I stick with the bank that I'm with? Brokers asking us that question. Stay tuned. We're going to tell you all about it.
Good morning, everyone. Welcome to Morning Minutes, episode 502. Myself, Michael BURGIO, Mark Novak. Loyalty. As you said in the intro, buyers constantly ask, especially when it comes to finance. Even when an agent, most of us will say, are you speaking with a broker? And very often they're like, no, I'm speaking with my bank. And we're like, okay, just your bank? Yep, I'm loyal to my bank. I've been with them for 20 years. I won't look elsewhere. So today we're going to talk about, is that right? Should you speak to anybody else and who you should speak to? What should you be doing in that buying process when you're looking to get pre-approval? Mark, let's kick it off. First of all, what is pre-approval? When would you need it? And then let's go from there.
Pre-approval is normally subject to valuing the property. So what they will do is they'll say, yep, you can buy this place, and you're pre-approved. So we've approved your financials, we've approved maybe your other property that we've valued, and you're ready to go. Once you find the place that you like, we'll just value that, and then you'll be unconditionally approved.
Because people like to get the pre-approval because the bank will tell them what they'll lend them, because it's almost like going shopping without knowing how much money you've got. The pre-approval, a big part of it is saying, we'll lend you 600K. We'll lend you up to 650. So buyers like to have this done early because you know what to look for and what you can go up to.
Absolutely.
Who can do a pre-approval? Like, let's start with that as well.
So I think you're going to get a pre-approval from a bank or a building society, generally banks, the ones that are doing the loans these days. That's who's going to give you the approval. The bank, now, the person that's going to facilitate that is going to be the bank themselves. So they will have a representative. So you're getting a Westpac loan and you'll get someone from the Westpac branch doing the loan for you. So they're the person you're liaising with, that's filling out all the paperwork together with you and advising you. Or you can also get the Westpac loan from a mortgage broker. So a broker will sell all types of bank loans, but this particular one is going to put you through Westpac, and you'll be dealing with a broker who'll be getting you a Westpac loan.
Yeah, and I think a big distinction, which a lot of people may not understand what the difference is between a broker and a bank. And I was just thinking of an analogy just then. It would think of a coffee shop. Now, you may have your local coffee shop that sells Campos coffee exclusively, and they can only ever offer you what Campos does, price-wise and flavors, where there could be another coffee shop that has the ability, they're not exclusive to anybody, and they can supply you with many different flavors and styles of coffee, and they may be able to, So I think that's a distinction what you said before with, because Westpac will only be able to give you Westpac's deal. A broker has the ability to go to Westpac, see what they're offering, go to Commonwealth Bank, see what they're offering, and then go to maybe second tier lenders, see what they're offering. Of course, the buyer can do that themselves. They can physically walk into Westpac, they can physically walk into Commonwealth Bank, and I think they can apply direct with second tier lenders, can they? Can a buyer apply direct, or do they have to go through a broker for a second tier lender?
Generally through brokers. Look, the fact is it's really expensive for these banks to keep people selling their loans. So if you've already got a branch set up like Westpac DY, it's not hard to put somebody in there running out of Westpac DY. But I think the harsh reality is that running a sales force or a national team that's selling your mortgage as a bank, it's an expensive thing to do. And so people, but I do have to say, people have a warm and fuzzy feeling about dealing direct.
They do, don't they?
There's a connotation or there's an assumption that if you deal direct, that you are not paying any commissions as a consumer, you are getting it for cheaper, you are dealing with the horse.
Well, that's almost like how a lot of people think in life. You can deal with, say, a sales rep. Let's say if you look at furniture, you can deal with the little store that may sell one product of that company, or you can go direct to the warehouse. People think that's how banking works. But to basically put it simple and tell you what side I'm on, it's wrong. Imagine this. If you think about buying furniture, if the going direct to the warehouse you didn't get was worse than dealing with the intermediate place selling multiple was better. It's basically the reverse, I believe, when it comes to finance. So a lot of people have that assumption because that's how it generally works with products. I buy direct from the warehouse, it's cheaper. I go to the bank, I'm dealing direct, I've been with them for 20 years, I'm going to get a good opinion. That's wrong, is the side of the fence I sit on. And when I hear clients say to me, I'm dealing with the bank, I'm like, go get a second opinion. You're dealing with one person who, and most of the time at the bank, that's not their core job there because they're not focusing it anymore. And I reckon that's probably one reason why a lot of the banks have downsized from used to being in these 500 square meter properties to these basically holes in the wall, because their sale part of it, doing loans, has reduced. They may have one person, but somewhere where like Shore Financial, which these are the new things in the last 10 years, these brokering firms who will do the loans for you, they've got hundreds and they're taking a lot more space. So there's been a huge shift. Last year, I think 51% of all loans were done by a broker. It was increased. Up until last year, it had always been more loans done directly with the bank, but there's been a huge trend. Let's say 5 years ago, it was like 90% bank, and now it's say only 40% or whatever it is with the banks, because there are big benefits going to a broker.
And also, I think what guys, and I'd love anyone's comments out there today, what you guys are experiencing, bank or broker, and rate changes and stuff like that. But I do find that when the person that fights for you, a broker will fight for you more than a Westpac loan representative. I feel like they probably get so many more inquiries. They're almost much pickier with their business. I'd love to know what everyone out there is seeing in your feedback and your questions. But for instance, you may not conform with banks' policy. They're not going to do anything with you. They will simply just drop you. And that's a bit sad because you may think that's you. You're the problem for the whole lending, and no bank's going to touch you.
And a lot of people do. Like you go to your bank, like if you're CommBank, who are basically the hardest people to get money from, the top people, if you've got a late payment 2 years ago, they're going to say to you, you can't get a loan. And that person feels like, oh, I'm screwed. No one's going to give me money. And then that person lets you walk out the door. A mortgage broker, if they go to Commonwealth Bank and they say, we won't give you a loan, they're going to say to you, don't worry, Mr. Buyer, I've got 49 other banks. Someone will give you the money and I'm going to find them. That's basically in a nutshell.
That's in a nutshell. And how do you compete with that when you're a bank? You can't. Something I got to tell people that I'm really passionate about is renegotiating your rate.
Yes.
A lot of people are just shy. They're just, stay shy, stay dry. And when you're dealing with your bank, where are they going to take you? Nowhere. They're going to go, I'll see what I can do. When you're dealing with a broker, he's probably seen St. George have done this, ANZ have done that, and that another blah blah has Aussie Home Loans has done this. Well, I reckon we can do this for your loan. They've got a bit of more of a cross-reference out there of what everyone else is doing. They'll fight for you. They'll even take your bat and ball and go and play somewhere else. They'll move you to another bank if you can't get that rate right. Now, on that verge, this is a harsh reality that no one likes to admit. When you are with a bank for over 5 years, they become anti-competitive because because you've developed a reputation of just sticking around, and that's only 5 years. Now, when you're moving banks, you'll get a $2,000 to $4,000 induction or incentive. I think they call it a cash incentive if you move your bank. When you're getting a valuation, because you have to get your property valued when you move banks. A valuer, don't know why, but a valuer will, on a refinance, will always act different than a fresh loan. It's just common sense that the broker is trying to win your business and switch you to a new bank. That bank will be competitive with their valuation, more competitive with their valuation, and more competitive with their fees than just sticking with the guys that you're with. They've already got your business. It's common sense, guys. And as much as people don't like to admit it, it's true. Now, this isn't financial advice. I do have to say that. This is just experience of what we're seeing out there with clients and their loans, out even personally, our lending and stuff like that. Maybe wrong, maybe right, but it's certainly what we're seeing out there.
Yeah, because I've got a couple of points, so I'll get to Bill and Michelle's comments. It's like, when people say I've been loyal to them for 20 years, my instant thought is you're getting screwed. And look at it from this way. When the bank will offer, when was the last time the bank came to you as a 20-year loyal customer and said, thank you for staying with us, we'll give you $2,000 off your refinancing? Or when do they even call you to refinance and tell you the rate's cheaper? They don't. But a new client will come to the door. They'll give them the cheapest rate in the market and they'll give them a benefit. That's for starters, if you still believe the bank's on your side. And then two, I think another a false misconception, just like the going to the warehouse direct, I'll get a cheaper deal, is the banks pay the brokers, not you. A lot of people think, no, I don't want to go to a broker. It's going to cost me money. No, it's going to save you money. And the banks pay them as well. And they will, as what Bill says, the broker, another thing is the broker gets paid to get you the loan. So they're fighting for you. A lot of the time, the pay structure of the employee at a bank is not as aggressively weighted towards commission as the broker. So what I mean by that is the person at the bank may be on a larger salary and they get small commission per deal. But at the end of the day, if they don't do the deal, they've still got to get the large salary. Where a broker is probably getting a very, very small salary, if any, and they make all their money on commission. So they are going to be out there hunting so hard for you to get the loan and go to every bank and look under every rock. So you want lawyers who fight for you, brokers who fight for you, agents that will fight for you. Michelle's right. Brokers will search to find the best deals that suit your circumstances. 90 lenders. It's 100% right. And another fallacy is a lot of people think the best loans are with the top Commonwealth Westpac, and they sort of belittle or put aside or disregard second tier lending just because it says second tier. But they've got some of the most flexible terms. Money's money. Do you care who you got it off as long as you've got it and you're not getting screwed? And they're competitive.
Right, guys. Don't forget, these guys are giving you the money. So you got their money. So you're in the box seat straight away. Irrelevant that. The only thing you want to watch with companies that are a little bit small, banks or lending institutions are a little bit small, is sometimes they jab you after a couple of years. So they interest rate hike you like crazy. So you think you're getting a really good rate for a year or two. Then when you turn around and behind your back, they whack those rates up. The bigger guys generally won't do that gouging as much.
Yeah. And whenever your rate goes up, you get on the phone to your broker and say, can we refinance? They will go in the market and they will either call. So let's say you're a CommBank client for life and you don't care what we say. Fair enough. You can stay with CommBank, but still go through a broker, because think about it from this way. Who do you think's got more buying power of, i.e. getting the money cheaper for you at an interest rate cheaper? You who walk in once every 5 years or 10 years to get a loan, or a broker doing a deal with that bank 20 times a day. The banks give brokers, top brokers, better deals. So you want to align yourself with that broker, even if you want to stay loyal to the bank out there. Go through the broker, and I bet you he'll get a better deal than you can when you walk off the street. We're not saying this is right or wrong. It's just how it is in the marketplace. So you need to know this. Just like going direct to the warehouse, you can generally get a better deal. It's just how it is. And yeah. But Michelle, Bill, thank you for your comments. Sean, good to have you on. I think that's a wrap.
And, you know what else, Burge? A lot of this stuff is it just rolls off your tongue and is common sense. But for some people, if you have anyone in your family or a friend that you can share this story with, you will save them a fortune and you'll help us as well. So, and it's sometimes just the simplest questions I get asked. I'm like, really? You don't know that? You didn't know that? You just don't. You know, sometimes you can go along 5, 10, 15 years and just actually never get into that proposition or position, and you can just navigate through with this information that we're giving you guys.
People get their 30-year home loan and think that's the deal for 30 years. No, a lot of people are redoing that every 3 years. But like it's
And it sounds like you're watching your pennies and how's that going to make up? But you know, a 0.5% interest rate on a $500,000 loan is a significant amount of money if you're hunting that half a percent interest rate and you're putting it over 5 years or 10 years. You're talking a brand new car. So, you know, you will make an absolute fortune by hunting good interest rates and potentially changing your bank if your hand is forced, if you can't get that good interest rates. And I'm talking a brand new car every 5 or 10 years. That's the difference it can make.
Yeah. And I get where people come up with making their assumptions, because all through life, all through up to buying your property, dealing direct has always been probably cheaper with a lot of things. But also anyone before you've got a mortgage, you probably had a personal loan or even a car loan. And generally that's just set and forget. Got my 5-year loan and I don't renegotiate. I can't call the bank and renegotiate my personal loan. So we're sort of in that patterns, fair enough, but home loans are very different. So find a broker. All good. Thanks, guys.
Thanks, beautiful people. See you later.
Cheers.
Bye-bye.